Line as well, Mark from Mackay. Mark, what's your question for Daniel and Michelle tonight?
Okay, I'll try and keep it simple. Have been a share trader for the past 7 years, and that's how I've submitted my tax returns. My portfolio, because I've made losses over the last year. I've just done my tax as of today, and I've made a $1,000 gain for the year. I've sold all the shares except for one particular stock. I want to know if I can take that stock, like close out the trading account and convert it over to a passive investor as from the 1st of July.
Well, a lot of questions about share trading and losses on share trading are, I guess, not unsurprising given the market turmoil we've been seeing. So if you wanted to ask any further questions of Mark, I think he's still on the line. So with a $1,000 gain, wanting to know what to do with that one company that he's still got left there. Michelle, any thoughts for Mark?
My understanding of what the question is that you've been share trading and now you're wondering whether you can change your activity into being a passive investor, so then everything would be on capital gains tax account going forward. Generally, the ATO is looking at intention and how, whether you're going to hold the stock that you've still got left for a long for long term. So if you're changing, people can change their intention as long as they're not, swinging back and forth for tax reasons, so that you're not gaining tax benefits and advantages in doing that, because that's heading towards the tax avoidance type realm. But you can change your intention, but you have to make sure that you're holding it as a passive investor, that you're just holding it to derive dividend income, and that you're looking at capital gains over a longer term period, I think.
Okay, there. Yep. And Daniel, you would agree with Michelle on that one. Yeah. The ATO, will it sort of view gaps, because obviously it's very popular for Australians to go and work overseas. Do they view gaps then like that as, a bit of an alarm bell goes off as...
Yeah, well, they just assume that you have forgotten to lodge your return. So that what happens is the tax agents get letters all the time saying, 2002 and 2003 outstanding. And most of the time it's just simply because people have gone overseas, whether it's on holiday or working or, for all different types of reasons. And essentially, as Daniel said, they just need to lodge a firm or notify the ATO that they didn't have to lodge a return in that year because they were overseas or, they generated no income.
The important thing is if you are overseas and you did earn income in Australia, you do have to lodge a tax return.
Say whether through a rental property,
for sure. So you might have a share portfolio, rental property in Australia. You're living overseas, you're earning income overseas, paying tax overseas. There's still an Australian tax return to be lodged when you earn income in Australia.